Matthew Fitzmaurice launched EcoAlpha Asset Management this summer. The hedge fund has an unusual strategy. It seeks to deliver superior risk-adjusted return from long-short equity investments in water, energy and agriculture. Fitzmaurice points to a series of key demographic trends that are going to have broad-reaching impacts over the coming decades. He believes those who are seeking to find a solution to these global problems will win out.
My sense about the direction of hedge fund investing is that a lot of it has been informed by the 2008 crisis, in the sense that the very difficult returns in 2008 have made managers essentially skittish since 2008. And so we've seen lots of this risk on, risk off, risk on, risk off, and we've had not a lot of continuity in terms of net exposure, and the result of that has been pretty mediocre returns at or around, the -5 to +5. And of course, if you lay that against the backdrop of, the general institutional investors' view of the hedge fund world, there's a bit of consternation around that. And so it seems to me that what has to happen is the hedge fund community needs to sort out how to be more valuable to the institutional investor. So instead of simply just delivering a return, they need to be able to deliver a domain expertise that the institutional investor then can leverage in the rest of their portfolio. So as I look out, I think that it's going to be really important for hedge funds to figure out how to take their domain expertise and deliver that in a broader sense than simply a return to the institutional investor. What we observe is that some of the places that historically have allowed hedge funds to outperform have become, reasonably more efficient. And so as we've looked at the landscape, we've identified some areas where if you're wearing a certain lens, it might provide an opportunity to generate superior risk-adjusted returns, or, in the parlance of the industry, alpha. Let me give you an example. So as we look at the world, we see that there are certain global trends and drivers. There's population growth, changing demographics, higher protein diets, climate change, and they are having an impact on certain kinds of natural resources, water, ag, and energy. It's our view that as those burdens become sufficiently large, such that corporations, governments, and consumers look up and say, it's in my economic self-interest to solve for these problems, they then choose to spend and change. And so an opportunity from a hedge fund's perspective, being both long and short, is to stand in the way of that spend cycle from the long side and to be short those areas of either industries or specific securities where capital will be withdrawn because of these global drivers. And so that's a way or an area where, by wearing a different lens, there is inefficiency, and therefore there's the ability to extract superior risk-adjusted returns.